Hello traders, this is Dan Hussey from RGO Futures bringing you our strategy of the week update for crude oil. We're taking a look here at the WTI crude. We got a daily continuation chart up and price action that took us down into these the most recent lows in 2016 into the 30 handle. I'm really concentrating on two kind of major levels, the 30 and the 60 level, that have kind of bound this market in some larger sideways price action, and what could become, a sideways range going into the future. There's no, knowing for sure, where we go from here, several months out. Do we stay in a range or do we start trending again? But what we can defer from this market is that there was definitely some kind of serious resistance up at the 60 area that kept oil suppressed. And then there's clearly some support down at 30s where once it got down there, it just popped off and headed right back to 50. So these two levels theoretically represent two different kind of thresholds for oil production. Old oil wells that have been around a long time cost generally less than $30 a barrel to pump oil out of the ground in terms of continual usage costs. But newer wells have over $60 a barrel costs associated. So they need oil to be above $60 a barrel for them to even break even. So while you're below that threshold, you're below a fundamental level where ideally you're really starting to, the market price is actually starting to squeeze out producers. But every tick that crude rallies, more oil wells will get turned on, and supply will come back and flood the market and drive prices down once again. But the uncertainty with oil that can come in any futures contract is, of course, what keeps things better bid. And I think with the new president and the current kind of geopolitical situation, there's plenty of uncertainty in the world right now. So we are seeing that bid in commodities, or at least in oil, and as of late. And actually a stronger dollar and kind of a flight to safety. So, but with that being said, oil heading towards the high end of its range. We had been looking for it to come off the 40, out of the 40 handle and test up into the 50s all through early last year, and finally we're kind of up into this area, but we're starting to come back a little bit. So let's dial down now here into the onto the 4-hour chart here to kind of take a look at just the most recent leg up in crude to see if we can't figure out any and determine any support resistance levels that could come into play here in the near term. So that bigger picture, we know we've got some room to the upside until we get to resistance up around 60. So there's definitely the ability to find support and rally still. But if this market does want to fall off and test down, below 50 and into the 40 handles here, to the lower 40 handles, I should say, it's not out of the realm of reality. We're seeing a fourth quarter trend that completed into the new year, and now subsequent profit taking from what was otherwise the end of the year rally. Some support levels we're going to look for. Well, for starters, I was hoping and expecting to see the 100% line hold here. It's still not it's still not done. It has traded into the 51.16 area, and while we're above this 50 handle, or really what I consider invalidation for that low, we could find a bottom here and potentially head higher. In terms of retracements, you could of course see this market dip down and pull back all the way towards a 48.72 to a 47.16 area if it's going to be doing a larger pullback. And in that instance, we would be looking for some kind of maybe larger correction to kind of ensue and create a larger three-wave structure lower into that support level. So we've come into support in the near term, dipping just below the 51 handle here. We're dipping into a support, a Fibonacci confluence zone that comes from the equal legs measurement off the high. So that's one leg then extended from the measurement of the other. And is oftentimes, and particularly in Elliott wave, it's a good indicator of a corrective structure. and oftentimes the termination point for that corrective structure. So we're going to keep an eye on this here going forward. It's been an interesting year for all the commodities, and oil still seems to be, at the forefront of the kind of geopolitical situation. So that means it's going to be a contract that moves, and throughout 2017, it may be, it might be one of the bigger movers. So keep in mind here, there's also a trend line that we're kind of coming into support area. So honestly, I see us into support. We'll see where it goes from here. But there is the potential for the market to now rally up into new highs and test for another push higher towards the 60 handle. So if it doesn't make it to new highs on a reaction here off of a test here, and it does test lower, well, you'll have a larger corrective structure in play at that point, and we'll be looking to participate on that type of setup if and when it happens. So the big support levels below us. We're into one here into the 51 handle, and then it's 48.72 to 47.16, going forward. So with that being said, have a great day, everybody, and we'll be back with you as price action develops. Take care, everyone.